I hope when we're done, you feel like the time was worth it. I know at least the price was right, so I don't know about expertise or not, but hopefully you feel like you got what you paid for on this one. I've done these for quite some time now, and I still can't get used to the dynamic of just looking at a computer screen and pretty much talking to myself, so you'll have to bear with me at times. As mentioned, I've been doing this now for over 22 years. I'm primarily underwrite, but I also have pretty broad knowledge of claims and experience and how claims are handled, and also, unfortunately, how our legal system works and how sometimes it doesn't work. And learning from people's bad experience, we've also learned how some firms just escape from claims fairly early and how some firms just aren't that lucky, or they are just lucky they had insurance. Both good and bad. What I kind of want you to hear today is if I were sitting beside you in your office and I was your risk management partner, these are some of the things that I would talk about to you today. So, with that, we're going to get kind of into a poll question here, and then we'll really start the presentation. So, Sharon, you want to open up the first poll?
Okay, yeah, let's get this first poll going here. What is your primary area of practice? And you should all see this on your screen. Just click the primary area of tax, audit reviews, financial statement preparation, financial planning, or something that we didn't list here. And again, as a reminder, participating in the polls is required for CPE. So whatever answer you select is less important than just picking a answer to get the CPE. And we'll give everyone an opportunity.
Well, while we're doing this,
yep.
I've got my my disclaimer up. You could tell this hasn't been vetted by an attorney because it's pretty short. I think that I could probably get sued for giving you bad advice, but normally advice is something you get paid for, and we all know what people say about opinions. So what you're going to hear today really is just my opinion based on my past 22 plus years experience. And so I guess the poll is pretty much closed.
Yeah, I think everyone's had a chance to vote here. I'm going to be closing this out here. If you're looking for CP, make sure you select something here for the polls. And we're going to see that pretty much our audience is primarily tax-based.
Yep. Okay. Perfect.
Very good.
And again, some of the things I'll talk about today it doesn't really concern GAS or GAAP or any of the technical standards. I'm pretty much of the opinion that all of you are following GAS, GAAP, tax standards. But what I want to talk about today is just ways we can avoid risk and also what type of risk we have out there today. And they have changed quite a bit over time, but some things haven't changed. And that's what we are trying to manage. And I do think these are what I would consider in order of what I would rank as priority. Insurability and money, I put last because hopefully most of you that are practicing have insurance and you can recover any money or damages that you may have to spend. But you will never recover the amount of time that you spend in a lawsuit. And people just don't understand how much time is involved in a suit. This was from one of our older claims, and you could tell it was old because of the partner billing fees. But this was a fairly simple claim, not a complex claim. I don't believe there was an audit involved. And you can see that this firm spent over 505 hours, or almost 13 weeks of time, involved in this. And what people don't realize is that once you get involved in a claim, it kind of has a life of its own. We have a claim now that was opened in 2006, so it's almost coming up on its 10th year anniversary. We were set to go to trial a couple months ago, earlier this year, and the plaintiffs, basically we had trial set for Monday. We gear up, get ready to go to trial, spend 2 weeks preparing. Our firm spent time out of their schedules to prepare for trial and attend trial, and then late Friday afternoon the plaintiffs filed a motion to basically delay the trial, which the judge granted for another 6 months, actually longer. We haven't even started. It's been postponed until next year. So you can see that these claims, once you get involved in them, just take an awful lot of time. It's something that you'll never recover. You will be sitting around the house on the weekend trying to enjoy a football game, but you won't be able to really enjoy it, and because you know you've got a deposition scheduled for Monday morning, or something else that's maybe scheduled for then that's revolving around this trial. Not to mention the fact that you're going to be worrying about them, you know, possibly losing money. Also, professional and firm reputation. People don't really think about that, but all you have to do is look in the recent headlines. Just the other day, Ernst & Young was found liable for faulty Madoff audits, which I was a little surprised that happened because they were just auditing one of the funds that had invested money in the Madoff Ponzi scheme, and the jury found that I guess that Ernst was actually responsible for doing a little deeper audit than what they had done. Luckily, though, they didn't get hit with a full $100 million, which was another headline from just before the trial came out. But they did get popped for a $10 million judgment. But you can see, you don't want these headlines in the paper, and you don't want any of this out to the public where your reputation may be damaged, because people read these. They always read the whole article, of course, and they don't understand the article, but you just want to avoid the headlines. And one thing I always do, and what we have now on our website, which is down listed at the very bottom of this page, we Google, we scan, we look for headlines like this, and we have a news aggregator on our website now. So if you want to keep up with what's going on in industry news, especially as far as lawsuits against CPAs, you can go to our website and go to this link, and you can kind of keep up with that. You know, I recommend it. Sometimes the best learning experience is someone else's bad experience. So if you want to protect your firm and kind of keep up with what's going on in the profession, that's a pretty decent resource to look for. Insurability, you know, if you have too many claims, it's going to be impossible to buy insurance. I would not practice today without insurance. I know this sounds like a big commercial trying to get you to buy it, but again, if I was sitting in your office as your risk management partner, I would seriously consider retiring if you were going to tell me that you were going to drop our insurance coverage. I wouldn't do it in today's world. We've seen enough cases in the United States to know that if you've got enough money, you're going to get as good as justice as you can afford. I think this cartoon says it all. It really sums it up. CPAs are in the crosshairs, I think, since the 90s. I won't spend a lot of time on these statistics. In the one page, though, you should look at, and this is in the back of the presentation materials, this is just a quick snapshot of the claims that we have, the claim stats that we have, in which we have paid money. And you'll see the average size claim is $197,000. So once we have a claim open and once it gets in progress, we're not going to stop until somewhere around $200,000 based on the averages. The audit claims are the most expensive, or at least the most frequent and expensive. They're almost $380,000. We've had 2 entertainment claims. These are kind of one-off things that have been about $400 apiece. And then the SEC claims are extremely expensive to litigate. Those are about $431. And getting back to the previous slide on insurance, depending on the type of practice that you have, and most of you on here today are tax practitioners, you can see that tax claims represent the highest number of incurred claims, but they're the least expensive as far as numerous claims to litigate. So the average tax claim is $119,000. The average audit claim was $379. If I had a large tax practice versus a large audit practice, I might consider lower limits when I'm buying my insurance coverage. So that's just some of the things you can think about when you're looking at this. And then just on the audit side, I always like to point out that failure to detect and the under and overstated liability category, which is over 50% of our paids, is primarily where most of our large claims come from. The largest claim we've ever paid was an audit failure involving a well-known, respected person of the community that the firm maybe was a little more aggressive in some of their auditing or some of their reporting requirements. That was $5.2 million, which wasn't too bad considering the limit was $5 million, but the demand, the original demand, was in excess of $90 million. So failure to detect under and overstatement of liabilities, again, I'm not sure if these were intentional, but these are primarily bad clients. And getting back to my statement about gap and gas, we have very few claims that originate because of a gap failure or a gas failure. On the other hand, in any of these claims, if we don't have a firm that had followed gap and gas, it makes it near impossible to defend a claim. So again, I'm assuming that most of you are following gap, gas, all the technical standards, because we've just never had that many claims that were a result of not following them, of course, unless it's tax. But just keep in mind, most of these claims are really from just bad audits and really bad client selection and retention procedures. Type of tax claims. Most of our tax claims now are just standard and proper advice, but we're seeing more and more claims in the personal estate area and also the timely filing area, believe it or not. That's something that you just need to be aware of. And if you get any takeaway from this today, especially tax practitioners, once IRS assesses a penalty against your client, regardless of the size of the penalty, whether it's within your deductible or outside of your deductible, notify your insurance carrier right away. You want to be able to protect your rights under the policy, and don't wait until you get the final word from IRS. Once you go through all the appeal procedures and whatnot, don't wait on that. That may take a year, it may take 2 years. By that time, you could possibly void your insurance coverage. So, you know, begging you, if you are a tax practitioner and your firm gets a penalty notice, or your client, and your client's expecting you to pay for it, and you're trying to get that penalty abated, make sure you put your insurance carrier on notice right away. Don't wait. That's pretty dangerous as far as your policy coverage goes. We're seeing just more and more, regulatory and the tax environment. We've got the ACA now to worry about, Dodd-Frank, the IRS, state boards of accountancy, PCAOB, SEC. I mean, the list goes on. It seems like more and more we've got just regulations just out the wazoo to worry about. It's just, I think, really hard nowadays to be a general practitioner without trying to really be just an expert in one field. So that's another issue we've had. Legal system, I think that since Enron, since Anderson issues, I think judges have recognized that there are some problems maybe within the profession, and so I think they're less likely to let CPAs out of cases early, so we don't have the opportunity to get in with a motion for summary judgment and get our guys out quickly like we used to. The judges are more willing to let us go through discovery and depositions, and all of those just churn up the legal fees. You just, getting back to our average cost of litigation at $200,000, it is extremely expensive in most cases to litigate a claim. And we're seeing fewer and fewer motions for summary judgments letting our CPAs out. Impartial juries, what can I say about impartial juries? When you go to trial, which we don't try to do that often because we just never know what a jury is going to decide once they've heard all the testimony. And remember, this jury is not going to be made up of your peers. They are not going to have any clue what GAAP is, what gas is. They're not going to have a clue about how Section 1031 exchange should have worked, or an estate tax election that you missed. Most of them may be like some of the Anderson jurors that are actually sleeping during some of the testimony. And also, I like to keep this out in front of anybody I have an opportunity to speak to. Cameco did a survey a while back, and I still think this holds true. This is not that dated, but the people that they polled, 57% of those people believe that CPAs often manipulate numbers to say what their clients want them to say. Only 26% of the people responding disagreed with that statement. 62% believe that accountants would look the other way if a client violated the law just so you could preserve the client relationship. 67% believe that if an accountant did not catch a company fraud, you should pay a severe penalty. So remember, when we get in a case and we're trying to get this thing settled, and it never fails that when a claim first occurs, our members are normally pretty excited about it, and also they really want to fight this thing tooth and nail to the very end. But after 2, 3, 4 years, it does start wearing people out. And also, once they realize that when we get into trial and we spend 2 or 3 weeks going through expert depositions and providing the jury with just numerous data, we have no clue what how they will decide. And also, when you look at the survey like Cameco did, I just mentioned, and these people already have their minds made up about CPAs and their roles with their clients, it's very, very tricky to just kind of throw your fate to the wind and go to a trial. So most of our claims are settled. Most of the claims against CPAs, I believe, are settled. That's why you don't just see, that many headlines about CPAs being sued. What I worry about, these are the big things on my radar right now. Electronic discovery and digital files. These things, those two to me are kind of one and the same. They're two separate issues but are related, because nowadays with electronic discovery being so easy for trial lawyers, for plaintiff attorneys to go through your files, with word searches and crawlers and whatnot, it's just easy for the other side to build a case, much easier than it used to be when you had to go through paper files. Digital files and data breach, that's the big thing, I think, now in our world. We have just changed our policy and expanded coverage quite a bit, and so has everyone else. Again, I don't want to sound like this is an infomercial, but if you've got professional liability coverage, if you don't have the data breach, cyber coverage, is something you want to consider doing. And remember, though, too, a breach is any type of potential loss of information, primarily Social Security number information, and then credit card or debit card data. So if you guys, any of you are taking credit cards for your services, that's another thing you just have to protect. And also keep in mind, this does not apply just to the electronic versions. I don't know, most of you, 58% of you are tax preparers, so when you go home at night, you really shouldn't leave open files on your desk, on your floor, on your credenza, on your filing cabinet. I know when March 31st came around, when I was in public practice, we had files everywhere, but you really, and I think professional standards and Circular 230 and some of the other issues as far as protecting client data require you to put those up every night. If you've got a cleaning service that came in, it's very easy for someone like that to go through those files and snatch Social Security numbers and credit card numbers. So you have to be extremely careful with that. And keep in mind, this data breach doesn't have to be actually known to be used during a fraud. If you lose a laptop, it doesn't matter if that laptop was taken and actually had the hard drive wiped and then wound up in a pawn shop. We have to assume that that personal information on that laptop is going to be used in some sort of criminal activity, and you are required by state and federal law to notify anyone whose identity may have been stolen. These are some things I think I'm not going to go to the cyber threat map because I'm afraid the technology may not work, but it's an interesting website to go look at. Both of those down at the bottom, and also this information at top. And these next slides came from the company that we're doing our reinsurance. We buy the cyber coverage, we reinsure it all, and this is from the company in which has kind of partnered with us. What you see at the top is just a bulletin board for hackers, and this is the type of information they're selling, which is primarily personal financial information. But if any of you handle medical records, you'd be happy to know that medical records sell for about 5 times more than just the personal ID and credit card information. So you have to be extremely careful with that type of information as well. The cyber threat maps is really interesting. I'd suggest when you get a chance this afternoon to go to, I like the Norse website. You can click on those links and it should take you there. If not, let me know and I'll send you the links. It shows you the actual active hacks that are going on now, and it's interesting to see the number of hacks that are going into the Middle East. I know the anonymous web hackers or whatever threatened, ISIS websites, so you can almost see that in real time, the hacks that are going back and forth. It's kind of chilling. That's one reason I put this on here, is just so you can see that the cyber hacking is going on all around you, basically 24/7. This is something that we've seen, and the highlighted, the bulleted item I have, or the bold item I have, these are primarily the biggest losses that we've had to date, as well as just employee negligence. Is opening infected email attachments or unlocked computers. And the cost, you're responsible to pay for all of these items once you've had a breach. And you'll be happy to know that most of these breaches are between $10 to $30 per record, but I've seen estimates that are even higher than that. Because it doesn't include the legal fees, the IT cost, and government fines as well. If you go look at this and then you consider the big breach that the feds had not that long ago, I think, when they lost 21 million records, at $30 a record, that would have cost $630 million. Luckily for the federal government, they aren't responsible to notify any of us, as far as I know, once our files have been breached. But you want to make sure your insurance coverage covers these types of things. Going back just 1 or 2 slides, you want to make sure it covers this. You especially want to make sure that it covers the IT repair and restoration and forensics, because once you've had a breach, you really need to get in there and find out, number 1, how it occurred, and number 2, if the hacker is still in your file or still in your system, going through your client's records. So the types of breaches we've had, as I mentioned, we've kind of had them all. We've had stolen laptops. Spoofing has been a big deal for us, and hacked systems. Stolen laptops, just a quick tip, if you allow your employees to carry laptops, which who doesn't these days, and they're encrypted, just please don't put the encryption code taped to the inside of the laptop carrying case. that doesn't help much. And the other thing I think I would recommend is that any of you transfer money for any of your clients, which we've got firms that do this on occasion. They will get an email from their client authorizing them to wire money to another account to either pay bills while they're gone or cover payroll or whatnot. Always, 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 100% of the time, call and verify before you do it. We've had several instances where someone got in to our members' files and took over their email so that it looked like it was a real email, even responded when our firm, sent them back an email, responded the whole 9 yards. It looked like it was an original email from their client, but it wasn't. And once the money's gone, it's too late. Banks aren't responsible for that money like they are maybe for a stolen credit card. So you've just got to be very, very careful. We had our first case of ransomware, which a couple of weeks ago, one of our firms, their HR person received an unsolicited email with a resume attached. They opened the email. Of course, the resume was loaded with some sort of Trojan. They came in the next day and their computer screens were all locked, and they were held for ransom. Now, ransomware is pretty interesting in that, from what I understand, most of the ransom is less than $1,500. Our firm that got hacked, the first day demand was $500, and I think it escalated $250 a day. But the reason the hackers do that is because then they know that law enforcement won't get involved and FBI won't get involved, and most firms are just going to pay the ransom. So you've got to be extremely careful, and you've got to let everyone in your firm know that you have to be not only careful with the files you opened, but also just make sure that the person on the other end of the computer that you're dealing with is the person that you think they are, and you can confirm that. How do you protect your firm? The only way I can really tell you is to buy insurance. Again, I'm not trying to sell anybody anything, but if I were practicing today, and as a matter of fact, we purchased cyber coverage just for CPA Mutual. It was a couple months ago. We invested a little bit of money in our website, and I really didn't want to take a chance of coming in one day and seeing that our website was held up for ransom or whatever else they could do, or just totally just blown up, and not recover some money for that. So I think it's extremely important nowadays that you have cyber insurance, and you can buy cyber coverage without buying professional liability insurance, so just keep it in mind. This is the way, when I practiced, the way we carried files, just in good old banker's boxes. Of course, it was a little harder to steal, and it was extremely hard for plaintiff attorneys to go through and do searches on. They had to give one of these boxes to some junior attorney, put him in a file room and let him go at it for a day or two, just going through paper after paper. But now you can get 126 boxes of banker's boxes of worth of information into one flash drive. Those boxes that we used to carry around was about 3,500 pages. Now you're looking at something that I can carry in my pocket that's got 500,000 pages of documents. So it's extremely easy to steal. You have to be very careful with your digital files. And also the digital files contain metadata. Again, not only can attorneys find silver bullets in those files to possibly hang you, but they can also find out, when the file was created, and more importantly, it tracks changes. So they can see if once a litigation hold is put in place on January the 1st, and on March the 31st, they can tell if that file was changed, and they're going to be able to put that in front of a jury and tell them that, see, I mean, once we sued this firm, the firm knew they screwed up, so they went in and they changed the file after a litigation hold was in effect. You can't do that with paper. Even though I have to admit, one of our claims actually was one of our firms was broken into, and not only were the computer equipment stolen, but the thieves went into their file room and they took all the A and B files, all the A and B paper files. So that led to another scratch your head moment of, number one, why would they do that? Number two, make sure if you've got paper files, you want to try to keep an up-to-date inventory of those files. Because here again, if those files are stolen, if those files are breached, and that those records breached in any way, you're going to be responsible to notify your clients. And if you don't have a list of even your paper files in the file and the clients that you need to notify, you may find yourself in a little trouble. So that's just a thought. If you've got paper files, try to keep an up-to-date inventory of those items. And this is just a summary of what you see nowadays and the amount of memory that's out there. You know, laptop hard drive, 5,700 banknote boxes. You're looking at 20 million sheets of paper on one laptop. So very easy for confidential data to get up and walk away, and also very easy for someone to get in and borrow it. I think we've got another poll question coming up.
Okay. So have you had a security breach at your home or office in the last year?
And there are some questions
Yes.
that are popping up, and I'm sorry if I don't get to all your questions. Please email me those, and I will make every effort to get back to them. If you're getting your computer repaired by a computer repairman, you may want to get, I know there are agreements that you can get with your third-party providers, confidentiality agreements. I would do that. Recommended minimum coverage for liability for firms, again, it depends on the size of firm. The old rule of thumb used to be one-time annual fees or $100,000 per licensed employee. I think you could probably bump the licensed employees up, though, to, you know, probably around 150 nowadays. So anyway, if you've got $1 million in fees, you probably want at least $1 million in coverage. But if you've got $1 million in SEC fees, I don't know how much coverage you need to have. It's probably not $1 million, though. So it all depends. There are a lot of variables that go into selecting the size of your limit.
And Bill, looking at the results of our quick poll here,
Right.
people have been lucky so far. No one's had any kind of security breaches at home or at the office.
Well, now, no one's had any security breaches that they know of.
Yeah.
Okay. And just a quick note, I heard the one of the actual IT security people, she was head of IT at the White House during the Bush administration. She spoke and she said that she equated using free Wi-Fi at a hotel or Starbucks or anywhere else the same as walking through a hotel lobby, picking up a toothbrush and using that. So if you're using free Wi-Fi, don't do any personal transactions on it, especially if you're using, you know, account numbers and whatnot, because you never know who's really monitoring that free Wi-Fi. On we go. Inexperienced staff and partners. Now, before I offend anyone, I want to flip on one screen. This is inexperienced staff. This is something you don't want to see if you're getting sued for a faulty audit. I don't want to see and have this brought up to me saying that the plaintiffs have, you know, here's one of their slides they're going to show the jury. Because keep in mind the jury perception about auditors and CPAs anyways, that you're kind of in cahoots with your client. And because why else would you send people out that did 83% of the work that only had 2 years or less experience? So inexperienced staff is still a problem. I understand the staffing issues that, that we went through a couple of years ago are maybe coming back, so that it's hard to find experienced staff. It's hard to keep people in your office that are experienced. But this was a claim that we had, and I don't do too many case studies now because of the time issues, but this was a good one. This was a totally defensible claim. It was an audit from a city, the failure to detect embezzlement. The reason that we basically had to throw in the towel is because the audit person, the staff person that was involved in this audit, in deposition said that she was left alone and that she had no idea what she was doing and she had no supervision whatsoever. Once we had her deposition, we had really no way to defend this claim. So we tried to get out and settle it as quickly as we could, which we did. So you just have to be very careful with the staffing. Inexperienced partners, this is probably more not inexperienced as it is dabbling. Dabbling now has become an issue, especially for people that don't do some of the more technical tax planning and tax codes or whatever. I mean, some of the major tax engagements, 1031 exchanges, 475 elections, and 706 filing and estate planning. If you don't do a lot of these, don't do them. Or if you don't do a lot of these but you want to do a lot of these, make sure you've got the CPE behind you, the technical training, and then I would suggest having either someone in your firm, or if your firm is not large enough, to have a friendly competitor in your area, or if you're an accounting association, have someone that can review your work. And I understand that there's always a first time that you do a 1031 or estate planning and 706 filings, but just make sure you know what you're doing, because we've had several claims where firms weren't experienced enough to do some of these engagements, and we got stuck. And some of these losses are quite large as far as tax losses go, especially estate tax planning and late filings. I can't reiterate again what I said earlier. If you have a tax return that's due, make sure you know the due date. Make sure you know when the statute of limitation applies. I've heard attorneys say if you don't have all the information for 706, you need to go ahead and file it anyway. And if there's money owed, or you think there's going to be estimated money to be paid, pay it, because the penalties are huge for late filing. So just be careful. These are some of the largest tax claims we've had have been from the failure to follow the 1031 rules, the 475 elections, and then the estate tax planning and late 706 filings. The money is very large. Bankruptcy trustees. These are primarily for large clients that once they go into bankruptcy, the court will appoint someone to go out and look for any and all assets that are available. And unfortunately, part of the assets are going to be your insurance policy, or quite possibly your personal assets. Most of these people that we've run across, our experience, they've been attorneys. And we've even had one that was an attorney for the plaintiff law firm. So, for me, it was a big conflict of interest, but for them, it didn't seem to matter. They're pretty ruthless. They're going to get paid regardless. So they're going to they're not going to let it go. They're not going. If you've got a insurance policy, personal assets, you were involved in a bad audit, that's something I worry about. Again, getting back to estate tax returns, I worry about those, but I also worry about trustee engagements. Now, in the past, I never worried about trustee engagements. I think most of our firms were just doing it as a favor for their clients. When their children were young, they said, sure, I'll be the trustee of the trust. Well, the children grow up, they're no longer little friendly, cute things. They're bickering over, dad's money. They don't think they got their fair share. If I were sitting with you in your office right now, trustee engagements is something I might frown upon. At the very least, once the children get old, I would advise them to go hire their own CPA to avoid any conflicts of interest between them and your client, who is probably the person who funded the trust in the first place. Wealthy clients, we've had bad experience with wealthy clients. I think a lot of them absolutely are for sure they are always 100% always right. That's how they got rich. And if they lose money, it's not their fault. It's got to be your fault. So with that kind of ego thing in mind, and also they have the money to pay for an attorney that will sue you forever, wealthy clients have really popped up on our radar. You have to be very careful with the type of work you're doing. Of course, new legal theories always. I mean, you never know what's going to happen tomorrow with the legal system. We go back and forth, but those are just some of the legal theories that plaintiff attorneys are working on. Deepening insolvency, and the the Supreme Court expanded fiduciary liability quite a bit in a recent decision. So that's something we'll have to keep an eye on too. The Affordable Care Act, I'm just not sure yet what's going to happen with that. It has, I think, put a lot of liability on your plate as far as compliance issues go in your clients. You've got clients now, especially some of the younger clients that you're trying to advise whether or not they have to buy the coverage or not. And also, if you're an auditor, I'm not sure if you're responsible to go through your clients' health care or the affordable care and all of their the insurance that they give, medical insurance they give their employees to make sure they're in compliance with the Affordable Care Act. The penalties for this thing are pretty large, and they can accumulate pretty quickly. So, you know, I'm not sure if you have a liability on the books that you're unaware of. I'm not sure about the penalties in some of these cases. You know, I don't know. I think it's just going to take time to see, but that's just something that certainly is something I think about. We'll see how it goes. I mean, the Affordable Care Act is really just now starting to kick in. So we'll see what happens with some of the penalties going forward. Other things you can do to limit exposure, I think client selection and client retention are the two most important, but also communication with your clients. If I were practicing today, client selection would be, you know, top of my radar before I let anyone come in and join our friendly little group. I'd do background checks, run credit reports, I'd screen all clients, I'd do Google checks, I'd do anything I could to find out about who this person is that want me to do work for them because you hope it's a long-term relationship and you hope it's a good relationship. Just be consistent. You don't want to be accused of discrimination. So if you have a client screening program, just make sure you apply it to all of your clients. I do it to current clients that have been with you. Every now and then, you certainly want to do some sort of Google check or just a look-see to see if there's any news about them on the internet. You'd be surprised what you might find. I trust my gut and trust my staff. I get calls quite often from members that are asking me, they're telling me they have a problem with a client. They just don't know what to do, but I can almost hear in their voice, I can hear in their voice that they want to fire the client. They just kind of want me to tell them to. So, you know, you've got that gut feeling about a client that's just not giving you the warm and fuzzies. There's probably a reason for that. So it's something you need to think about. And I put trust your staff on there because your staff are going to be the ones that come into contact with most of your clients and spend most of the time with them, especially if you're doing audit and reviews. Your clients out in the field, they're doing field work, they're sitting down the hall, they can hear your client, you know, in their office, they can hear how they interact with how the client interacts with their staff, with customers, with their banks. So, you know, just trust your staff too. Fee resistance and advice resistance. If a firm's not going to pay you and they ignore all the advice you give them, why have them? Life's too short, especially on the fee side and advice side. If they're not willing to pay it and they're not willing to listen, then you need to send them down the road. Most of this is pretty self-explanatory. One of them that might not be is a gatekeeper. If I had a firm with several employees, of course, if you're a sole practitioner, you don't need a gatekeeper. You're it. But if you've got a large enough firm, I would assign maybe one partner to handle any legal issues so that your staff knows who they can go to, who to contact as far as either an attorney to help you get through an issue or your insurance company. Your insurance company is a great resource to help you go through some maybe troubling times as far as maybe firing a client or trying to disengage from a client. But you just want to have one person that's doing all this. And also, for subpoenas that come in your door, you want to make sure a partner or someone, that knows that subpoena's in. We've had issues before where a partner will be served with a subpoena and the other partners don't even know about it. Everybody in your firm needs to know about subpoena, especially if it involves the firm, if it's actual subpoena to sue in the law, the CPA firm. One thing you can do, and that's this is my only technical slide, you've got to remain independent. Even the appearance of not being independent. We had a claim fairly recently where our guys, all they did was go deep sea fishing with a client, and that was enough for the plaintiff attorneys to try to make some big deal out of it. It's extremely hard to defend, especially getting back to that Cameco survey that I talked about earlier, when there's already a preconception of 67% of the jury that you're in cahoots, or you're in cahoots with a client and you're willing to cook his books to make them look like whatever they want. The last thing you want to do is have a picture put up of you either deep sea fishing or at the Super Bowl with the thief. And then avoid complacency. It can't be said enough. Even if you've got a client that's been with you for 35 years, one of the headlines I showed you earlier, one of those large lawsuits was a client that had been with the firm for 34 years. So you just cannot become complacent. Unfortunately, nowadays, I think it's a lot different probably nowadays than it was when I practiced, for sure, when a lot of your clients were friends and you just kind of took them at their word. The problem that you run into, and I think this is a great slide, is that if this was a study done on emphasizing personal characteristics versus this situational awareness, well, basically what this says is that auditors, and to some extent probably even tax preparers, put a greater emphasis on the character assessment of a client than industry red flags. This should be the opposite. If anything, you should put much more emphasis on industry red flags and financial statement red flags and character assessment. I think as a whole we're a pretty optimistic bunch, and we always think of the best of people. But unfortunately, when it comes to money and also maybe trying to keep a company in business, we become a little too overly optimistic, I think. And we believe that it can happen to my client, or it can happen to me. Well, it can. So just don't become complacent. This was just an audit. I think it's worth looking at. Some of you may have seen this before. It was pretty cut and dry. This was a mini Bernie Madoff. This guy came into the firm. They needed an audit. He invested his friend's money. He's been doing great, blah, blah, blah. Every year he goes on vacation to Europe. At the end of the year, he puts all his money into this trust company that holds the money while he's gone, so he doesn't have to worry about it while he's out. So we sent our confirmation out. We dutifully check-marked the $66.7 million market value, higher than cost. Everything looked great. Issued the audit report. The only bad thing is when they got this confirmation, they didn't check the trust. And if they had checked the trust at 30 South Wacker Drive, they would have found out that it was a fictitious company, that actually this was going to the bad guy's P.O. box, and his secretary was filling these out and sending them back in. So our firm, didn't do their due diligence. They became just a little too complacent as far as client intake. These are just some of the factors that you might want to look at if you've got some of your firms, just helping you identify problem clients early. I think they're fairly self-explanatory. And what else can you do? Your internal and external communication, you've just got to really work these. And I'm not going to spend any time at all on engagement letters. I assume everybody uses them. If you need some additional help with engagement letters, we've got examples out the wazoo. But even your internal engagement, internal communications can be discovered. And this was a deposition from a Big Four case or a CPA firm case. I can't remember. Yeah, I think it was a Big Four. I can't remember. But they had these motivational posters all over their offices, and they had these 3 little pebbles and this 1 big boulder. And I don't know if the little pebbles were stood for ethics and client service or what they stood for. But the important thing to know is the biggest pebble was this boulder, and that stood for profitability. So that was the thing that was being conveyed to the jury as to the most important thing in this firm was the profitability. It wasn't the other 3 little pebbles. It was strictly profitability. And again, just hitting that survey that we went over early, this is not something you want to see. But again, this is internal communication. So this was discoverable, and it was used against the firm in a lawsuit. And you have to remember, too, now with social media, your LinkedIn, your Facebook page, your website, all of that can be used against you in a court of law, so you have to be very careful what you put on these. Third-party communication. These are these client letters we get all the time. Our firms are calling me all the time for these third-party requests. I wouldn't touch them with a 10-foot pole. We have a very good article now on our website, and again, that's linked down at the bottom on our newsletter. These third-party communication letters, banker's letters, verification letters for how much money your client's making. Some of these all they want to know is whether or not you prepared the tax return. We advise our firms to stay as far away from these as they can. They're very dangerous. We've got one. This is a copy of one that was sent to us. This was during an audit engagement where basically the lender wanted our firm to certify his already certified statements by letting the insurance company know this was for a bond, letting the insurance company was putting the CPA firm on notice that they're relying 100% on their financial statements. All this does is establish privity in a court of law. It allows the third party to sue the CPA firm directly, or in most cases they can't do that. This is something, if you get a letter like this, you want to call your insurance company or an attorney to help you respond. If you can't throw it in the garbage and ignore it, then you need some help getting back to them on that. One big thing you can do is educate your clients. Let them know what's going on. Let them know what the third party is trying to do as far as getting you set up for a lawsuit in case something happens with the loan. Engagement letters, my advice is just to get them every year. All this is going to do is just outline what your clients expect and on what you plan on doing for them. It also is going to help us defend you once you get sued by eliminating, if you're just doing a tax engagement or review engagement and your client thought you were doing an audit, if we've got a engagement letter that's up to date and signed, this will help us defend you for sure. It's just going to manage the expectation gap. I know you've heard that before, but it's still one of our best defenses. just communicate everything in writing. Emails nowadays, if you have a discussion with a client in which you tell them or give them some advice and they turn you down, I think a good practice is to send the client an email outlining the discussion and outlining that the client, is not going to follow your advice. Just have something in your file that all issues are in writing. Just some tips. I would add subpoena coverage clause to all my engagement letter. I would work in as many of these clauses as I possibly could. The limitation of liability and indemnification agreement. Most of these are in the back section of the handouts. So you definitely want to, I think, add these. The subpoena coverage clause is a big one. There's no reason that you need to pay for copying costs, attorney fees, and staff time to go in your files and make copies of work papers in which there's a civil suit between two of your clients that you're not involved in. You need to be reimbursed for that. And get your lawyers involved. If you've got a lawyer that specializes in CPA defense, get them involved, and also get your insurance company involved. Almost all of us have sample engagement letters, and more than happy to help you draft these, because we know at the end of the day, a good engagement letter is going to save us both money. This is actually just one, just briefly, because we're running out of time. This was an engagement letter in which they used a limitation of liability limited to fees, and we actually won this. The client was only able to recover money that was for the review engagement, which the fees for the review engagement was somewhere around $26,000–$30,000. They were able to recover that. But as far as the rest of the embezzlement, which was excess of $100,000, we didn't have to pay anything. The client was able to handle this all within their deductible. So again, if I was practicing today, my engagement letter would probably be extremely long. And I think we have one last poll before we wrap up.
All righty, here we go. What do you feel is the most important criteria when selecting a professional liability policy? And Bill, while we're taking our poll, there was one comment that came through that was a very fantastic comment. It says, I have a very responsible job. If something goes wrong, I'm responsible.
Well, that's true, and that's why you buy insurance. But the problem is that most of the time I've seen our firms have done a responsible job, but they get sued anyway. And again, that insurance does come in handy in that case. But I agree. I mean, that's why you buy insurance. If you're doing a tax return and you screw up, which can happen, then you really do want to make your client whole, and that's where insurance comes in. Mm-hmm. On the other hand, sometimes you just get a bad client, and you get a few bad facts, and those facts, they can stretch out for 10 years, like I mentioned earlier with one of the claims we have. So I don't disagree with you. So just to wrap up, just to put cybersecurity, the client selection, retention, I'd be extremely proactive, trying to limit liability. One of those ways is communication with clients and staff, and also, again, use your insurance company and any attorney that you've got in town that's has some experience defending accountants. It's a wild and woolly world out there these days, and we've seen some, especially on the CPA legal side. This year our claim count is up. So don't think that because you've never had a claim it can't happen to you. It certainly can, and you do want to be as proactive as possible. I'm sorry to kind of rush through the end of it. I know there's some things maybe I didn't get to cover that I would have liked to. My contact information is here. You're more than welcome to email me with any questions you have. The phone number is there as well. I promise I won't try to sell you anything if you email me or contact me, but if there were some questions that you'd like answered that I couldn't answer, please feel more than free to contact me. enjoyed it. I hope you all did get something out of this. Just a few takeaways. There are some things out there that you can do to protect your firm. Primarily, it's common sense, but you just have to be a little more careful, I think, these days than what we were in the past. So just keep it in mind, and thank you.
Bill, thank you for a great presentation.
Well, thank you. I hope it was.
And folks, thanks again. When you exit the webinar, you should see the survey for the webinar, and we will send an email with that within an hour.